Wednesday, October the 15th. Any public comments?
Yes, sir.
All right. Can I get a motion to approve the minutes from September 17th?
I'll make a motion to approve the minutes of the Finance Committee meeting from Wednesday, September 17th, 2025.
I'll second the motion.
Motion and a second. All in favor? Motion carries 3-0. Item number 2 is our fiscal year 2025 financial audit review.
Good afternoon. Well, it's that time of year again, and we just managed to get our audit finished under the buzzer. Per our operational agreement, we're required to have the audit completed by October 15th each year, and we send copies to the county and the city. Because of our meeting schedule for the commission, the Finance Committee, and the full commission, we never have it accepted before the 15th. So letters have been sent to the county and the city to notify them that we will have the audit documentation to them as soon as it is accepted by the board. You may recall last year, Trey Scott came and presented our audit. Trey has moved into a new position and a new location. He's now out in Texas. And we are welcoming today Kirk Arich, CPA and director with our audit firm, Malden & Jenkins. And he will present the audit report to the Finance Committee. And afterwards, the staff is recommending that the Finance Committee recommend to the full commission acceptance of the fiscal year 2025 audit.
Look, I even got that working. All right, good afternoon, everyone. My name's Kirk Arch. I'm with Malden & Jenkins CPAs. As Dave mentioned, I recently relocated to the area to fill in Trey Scott's role, and it's my pleasure to be here this afternoon. So we've got some good news for y'all. Going to tell you a little bit about myself, a little bit about the firm. We'll go over the audit opinions, which I'll just go ahead and say are all good. We'll go over some financial highlights and footnotes, some required communications, and then I'll take any questions if you all have any. So again, I'm Kirk Arch. I've been with the firm about 13 years. I spend 100% of my time serving government entities such as you all, cities, counties, schools. We have a very dedicated team at Malden & Jenkins that are dedicated to serving governmental entities and the unique nature of their operations and the unique accounting basis that they have. We have over 725 clients total with 25 partners and directors such as myself, 150 staff, and offices here in the Southeast. So we'd like to point out we are a full service firm, but we offer this slide to highlight that we do specialize in governments. All right, so the independent auditor's report is the main audit report. It's the one that's at the front of your financial statements. Before we get into the opinion, I always like to point out what the commission's role is in regard to the audit and what our role is as your auditor. So you all are responsible for the financial statements themselves, all the information contained therein, and also the day-to-day operation and internal control of the financial reporting. Our responsibilities as your auditor is to express an opinion about whether or not we believe your financial statements are materially correct as a result of our audit procedures. We perform our audits under generally accepted auditing standards and under governmental auditing standards. We did issue a unmodified or clean opinion. That means we believe your financial statements are materially correct and there are no material omissions. This is really the best case scenario you can get in this type of audit, and it really represents the highest level of assurance that we can provide as your external auditor. So in addition to issuing a clean opinion, we didn't have any findings or any management points on anything. So that really is the best case scenario. So hats off to the management team for all the hard work that they've done to get a great opinion here. In addition to the independent auditor's report, we do issue 2 separate reports. The second one is a yellow book report. It is not intended to give an opinion, but it does revolve around internal controls and compliance with laws and regulations. I like to say this: if you see something, say something kind of report. If in the course of our audit we do see anything that we believe would be material to bring your attention, we would include it in this report. As mentioned, we didn't have anything to include here. You all got a clean report, so again, that's great. There were no material significant deficiencies or material weaknesses that we encountered that we felt need to be reported. The third report there is the single audit report. And there's kind of an asterisk on this one in that we haven't issued it yet, so I'll kind of go over that in just a second. But this report's required when any entity spends over $750,000 federal funding. You all had the ARPA funding this year, $1.2 million approximately. Basically what this audit is kind of a compliance audit, make sure that the money was spent on what it was supposed to be spent on, the reports that were required to be filed were filed, that kind of thing. We have completed the work we anticipate to be necessary on this and do intend to issue a clean opinion. However, the regulatory body, the OMB, that issues a document called the Compliance Supplement, and it's basically a kind of a program of all federal awards, and it tells us what we need to test each year for each different type of grant. That has been delayed. It was already delayed, but it's been further delayed by our government shutdown. So we don't really have a timeline on when we'll have that compliance report or the compliance supplement to be able to issue this opinion. But like I said, that's not anybody's fault here. It's not our fault either. It's just one of those situations. But we do expect to issue a clean opinion, but just kind of wanted to explain that little caveat. All right, so next I've just kind of got some high-level financial statement, kind of key figures. I know you all receive financial reporting on, much more frequently than just the audit. So these are just the annual numbers, and I just kind of picked some of the bigger ones off of there. So we did have an increase in our assets on our balance sheet there, about almost $12 million, ending the year at $290.5 million. That's a good place to be. It's always good to increase your assets rather than decrease. We've got capital assets increasing almost $20 million alone. That represents the reinvestment you all are doing in the systems that you have, and it's very commendable. It's what you need to be doing. Liabilities actually decreased, which that's a good thing too, down to $77.4 million. This is largely due to timing in your accounts payable. That kind of deals with your projects, but also payments that you all made on long-term debt during the year. So, but those are good trends. Moving on to the operating revenues and expenditures. So we do have a slight increase in operating revenues, a little bit larger increase in operating expenses. I think the overall takeaway though here is, you all are still in the positive with operating income of $4.3 million. I think that's pretty strong considering, pricing changes that are just out there everywhere. So I think those are good numbers. In addition to operating revenues on your income statement, you've also got a number of other types of revenues. We got investment income there this year around $3.2 million, intergovernmental revenue of around $3.7, interest expense that's paid, on long-term debt about $1.4, and then capital contributions of around $7.2. So total change in net position this year is $7.2 million, which is that's always great to add to net position, not take away. We ended the year at almost $213 million in net position. It's basically equity. So, that's strong performance and really great to see. A couple of highlights from the cash flow statement. There are actually three sections of the cash flow statement, but I just kind of picked out the high-level numbers here. Operating cash flows amounted to about $12.7 million in the current year. That's great. We just want to make sure we're not seeing operating losses. We did have reinvestments or purchases of capital assets of around almost $22 million, and then repayment of long-term debt with interest of about $5.6 million. So those are just some of the highlights on kind of what got spent where. But again, very good cash in at about 33.5, which is pretty much in line with last year. But overall, really good report there. All right, so in addition to the financial statements that are part of your report, there's also footnotes that go along with it. They help put the financial statements in appropriate context. The first footnote in all financial statements is the accounting policies footnote. It basically just says this is why things are recorded. These are our policies, and this is why things are recorded in a certain way. The second footnote there is going to be on it has some detailed information about the makeup of your cash balances, your restricted versus non-restricted, that kind of thing. The receivables details out different type of receivables you all have, and any allowances that may be on those. The capital asset footnote discloses kind of your capital asset activity with your additions, deletions, and your ending balances on each category of assets you all have. The long-term liabilities is kind of similar to the capital asset note. It takes your beginning debt, adds any new debt, and subtracts any payments that you may have made. It also has some specific information on each issuance or each type of debt that you have. The net investment capital assets footnote, it details out a calculation that is presented on your balance sheet that shows the value of your assets net of the related debt that's still on the books to finance, that was used to finance it. Then moving on, we've got our pension plan. That's just got some information about the plan, its membership, the MPL at the end, as well as the deferred inflows and outflows that are related to pensions. The next two are really kind of just informational, some things about risk management policy, commitments and contingencies when there are any. We did adopt a new accounting standard in the current year, so there's a footnote kind of denoting that for GASB 101 there. All right, so these are required communications. These are things we're required to tell you all as your auditors. The first up there, and I think probably the most important, is that we are independent of the commission, independent in fact and independent in appearance. We do believe that we meet the professional standards for that, and that's what really enables us to do this type of audit. So we feel good about that. The second is auditing standards. I kind of mentioned these earlier. That's going to be the governmental auditing standards and the generally accepted auditing standards. We follow those, as I mentioned. The accounting policies, those are the responsibilities of management, as are the judgments and estimates that are made there. We did not have any past audit adjustments. We're not aware of any consultation that management's had with any other firms. We did not encounter any difficulties in dealing with management. We do have some new accounting pronouncements coming out. We'll put those out in the form of a newsletter. The GASB is the regulatory body that sets accounting standards for entities like you all, and they're always busy. So, and the last thing up there, management representations. We do, at the end of all audit engagements, ask that management provide us with a letter, and kind of the short and sweet is it says that management answered all of our questions and gave us everything we asked for and told us everything that they thought that we needed. So we did ask for those representations and did receive those, and so that's a great thing. Kind of moving on, this will kind of be my last slide here. We do provide at free CPE, and we actually do it quarterly via webcasts, and we offer those for free to all of you and to the finance group. Anybody who has a CPA license, they're always looking for CPE. This is just kind of a value add on there. But we also feel it gives us a good opportunity to, kind of touch on some topics that maybe don't get as much attention, and to kind of provide some guidance on those new accounting standards as they come out. Additionally, we do provide a newsletter that kind of has hot topics as they appear in our industry. So with that, I'll close and open it up to questions. It is my pleasure to be here.
Thank you for that. On the Yellow Book report, are you looking at trends compared to entities our size related to like purchasing card, travel expense, fuel expense? Like, how do you maintain or look for trends that might throw up a red flag?
As your auditors, our job is really to give an opinion about the financial statements as they stand at the year end. Mm-hmm. As far as operational trends, it's hard to say because there are so many differences in the way that these different organizations are structured. Mm-hmm. It's not a part of our audit process. The Yellow Book report specifically is strictly related to compliance requirements that are put out by the OMB. It is we select a sample and test, and it's a yes, they did do this step, or no, they didn't do that step. So it's not intended to provide really any analysis other than that you all appear to have complied with the grant requirements.
So David puts in a process for monitoring the purchasing card, and LaDonna reviews a report, and she says that makes sense, and then Andrew approves it. Like, those are the steps you're looking for, something along that?
Right, especially with the single audit report. We would be looking to see that there was a system of internal control, which is what you're referring to, and that system's in place to make sure that all of those things happen in the appropriate order. If you had a purchase order that wasn't approved and that was part of the sample we selected, we would note that in the report, or if we found a cost that we didn't feel was reasonably justified, we would include that in our report, things like that. So, but we didn't find any of that on the work we've done so far.
That's great. Thank you very much.
Yes, sir.
Can we do a little longer one tomorrow? I'm just teasing.
I'd have to spend my
Full
afternoon,
commission,
but
would
yeah.
love to see it. I'm just,
I have a question. Who was here physically for the audit? Did you have an employee here?
We do have an audit team. I believe they came out and did some work on site, yes?
Let's see what they, there was, you came for the
Okay, yeah. This was all done a little bit before I arrived
Oh,
here.
okay,
so,
right, yeah, I thought, I was kind of concerned, there was kind of a rumor floating around the building that when they were coming, we had found an old door from a remodeling project, a couple of sawhorses and a folding chair for them to
Yeah,
use
yeah.
while they were here, but
Hey,
I guess that was a rumor, so.
Hey, it was a river. No, we have an online kind of secure file portal that we use.
Yeah, that's what I understand, yeah.
It cuts down on us needing to be here on site and in everybody's hair and everybody's way. But it also kind of allows everything to go a little bit more smoothly. It can house all the communications in one system. We feel that it's pretty effective.
I think we believe in proper prior planning also.
Yes, sir.
No question, so, thank you.
thank you very much. Can I get a motion to approve the,
I'll move that the JWSC Finance Committee recommend to the full commission the acceptance of the audited financial report for the fiscal year ended June 30th, 2025, and authorization of its release to the public and reporting agencies.
I second.
all right, motion and a second, all in favor? Motion carries 3-0. Can I get a motion to table item number 3?
Defer, sorry. Must be defer, can't be tabled.
Table, defer.
Deferred to the next
Can I
meeting.
get a motion to defer item number 3 until, do we want to say?
The next meeting.
The next meeting.
Next scheduled meeting.
I move that item number 3 be deferred until our next meeting.
I'll second the motion.
All in favor? Deferment carries 3-0.
Yes, sir, thank you.
Item number 4 is a contract award from Mr. Burrows for long-term water quality monitoring.
Yes, sir, we're required by our wastewater discharge permits to maintain what's known as a watershed protection plan. As part of that plan, we're required to take quarterly dry and wet weather sampling from streams up and downstream of the discharge points of the 3 plants. This agreement here is for integrated science and engineering to complete that sampling, analysis, and reporting to EPD as required by the approved watershed protection plans. They have been providing this service since prior to the formation of the JWSC. It's a very long-standing and successful relationship. The cost to do all 3 reports is $83,325. This is budgeted in the individual wastewater plant budgets. And so our recommendation, slight amendment to the motion that you see there is to, we recommend awarding a contract for the reporting requirements of the fiscal year 2026 watershed protection plan. That will be updated for tomorrow's meeting on the actual memo. But if you look at the work authorizations that they provided in the back, it gives you the locations where every sample is taken, as well as the measurements and laboratory tests they will be running.
All right.
So what do we need to do different on the motion?
Just that this is not for the creation of the plans, but for the reporting requirements associated with the plans.
That's what the motion
Yeah.
says in mine.
She's already updated, never mind then. I didn't read the motion. This was from last meeting.
No pop quiz here, Bill. You can vote the motion.
Yeah, I move that the Finance Committee recommend to the full commission award a contract to Integrated Science and Engineering for the report as required by fiscal year 2026 Watershed Protection Plan in the amount of $83,325.
I'll second the motion.
Any other discussion?
Mr. Burrows, this is in accordance with last year again? The water downstream is better than the water upstream?
It often is, yes, sir, because the amount of flow that we put out does make an impact on the streams in a positive manner in most situations.
Thank you.
Yes, sir.
Okay, all in favor? Motion carries 3-0. Mr. Burrows, number 5, contract award Whitlock Area Survey Services.
Yes, sir. I walked over here so we could pull up GIS. As part of SPLOST 2022, one of the projects that was listed on the referendum was for water and sewer service extensions to previously unserved areas. This project is to go out for surveying for the area known as the Gordon Heights subdivision between Whitlock and Lakewood Avenues, in between the railroad tracks in the North Mainland District, and I'm trying to get there now. There, you may recall, we had a customer, or a proposed customer, come by and talk about her well was failing a few months back. We have extended a very short section of water main so that she has the ability to tie on, but this is to do the larger area because there are multiple failing private wells in the area. And now we're finally getting there.
It's the railroad tracks in the
Yeah.
way, that's the problem.
Exactly. So, this is Lakewood Avenue, right here where you see my hand pulling down. You may be familiar with where the City Public Works building is, right there off of Habersham and Community Road. And then this is Whitlock that runs parallel to the railroad tracks. And so the goal here is to bring a water main. Let me see if the water layers are on. They are. So this is the extended water main that has already been completed. Is to bring this water main down the side of the road, tie back into Whitlock, and loop back into this water main up here. And then to bring water mains through these three cross streets, which are Burroughs, Kingsland, and what is the other one here? Hickox Avenue through there. This is for survey services to get the route survey completed, parcel survey, identify existing utilities, identify trees that are in the right-of-way, and also to pick up finished floor elevations so that we can do sewer design as well to ensure it can be served with gravity sewer. The way we're going to do this, we're going to go out for survey services, and then we intend to design the neighborhood improvements in-house. So we'll utilize the talents that we have in our engineering department to take care of this. And so the request is to award a contract to Jackson Surveying, a local company out of Brunswick, for $21,400 to complete the survey for the Whitlock area.
All right. You ready? Yes, sir.
All right, I'll move the Finance Committee recommend the full commission award a contract to Jackson Surveying, Inc. for Whitlock area surveying services in the amount of $21,400.
A second?
All right, any discussion?
Nope.
All good. All in favor? Motion carries 3-0. I had a question, I changed my mind. Thank you. Capital equipment purchase, mini excavator.
Yes, sir. As part of our capital equipment items that were listed in the fiscal year 2026 budget, one of those items is a mini excavator for our wastewater division. We were able to get 4 quotes for this mini excavator, with the lowest quote being a Kubota from Sapelo Equipment Company at $122,835, which is just under the $125,000 budgeted. So we'd like to move forward with the purchase of this mini excavator, and then when this is received and in service, we will have a surplus of a previous excavator that is no longer in service. So this will be to replace, not to add.
That's great. Sapelo's local, right? That's
They are local, yes, sir.
wonderful.
They are.
All right, can we get a motion?
I move that the Finance Committee recommend the purchase of one Kubota Model KX080 mini excavator in the amount of $122,835 from Sapelo Equipment Company.
I'll second the motion.
Any discussion?
Can I ask the obvious question? Why
Sure.
is there such disparity in the price for similar equipment?
Name brand has a big
That's-
part to do with that, sir.
We got the Chevy and the
Yeah,
Cadillac
yes,
and the
yes,
Rolls
yes,
here, is that?
I'm involved, I have sold this type of equipment all of my life for things like this, and he's exactly right, it's the name.
Yep.
The name.
That's exactly it.
So it's nothing to do with reliability or ability to function.
Well, luckily, I mean, with Sapelo, if something happens, they have a local service center and everything like that. So we've got other Kubota equipment. They're very effective. Yeah, you're just paying a lot of times for the name.
And I will tell you,
Actually say they did go out and look at this equipment, so one of the advantages of the Kubota too is it doesn't have some of the electronics and controls on it that the other does.
It's more old school approach.
Yes, and so our operator actually appreciates that and would prefer that because that's less things that potentially could go wrong and end them up in the shop. So
Right.
I'm a little bit different than the way we see certain things going. but-
A little old-fashioned, but
Yeah.
but
It's
solid.
comparable, you know.
Right, yeah,
size-wise
yeah.
and capacity.
it's also made in the state of Georgia.
Yes.
Well, that's good. That's excellent. Okay.
All right. Motion and a second. All in favor? 3-0. Thank you very much. And item number 7 is a 1.5-ton crew truck.
Similar item here, this is for our water division. The water distribution crews utilize this. This is a 1.5 ton crew truck. We were able to get 3 local prices, all for Ford F-450s. There is the truck price delivered from the vendor, and then we have to fit it with the custom service body that they utilize to store materials and tools on the truck. So there's 2 purchases there that go up to the total cost, and there's some ancillary other things that go on, very minor stuff, labeling, lights and things like that as necessary. So it's a slight bit more than the total cost you see there, but it's well under the $130,000 that was budgeted. The recommendation is to purchase a F-450 from Kings Colonial Ford for $71,360, and then utilize transport equipment company in order to install the service body at $26,140, which puts us at $97,500 for the truck, minus the minor details that get added once it gets here. And again, I got 3 prices, all of these from local providers.
That's great. All right.
And there will be a vehicle that is surplus as a result of this as well.
One of those really good ones.
One of those that's got all the goodie taken out of them, yes, sir.
200,000+ miles.
Good hunting truck.
Some Sapelo Island.
Yes.
It's a motion?
I'll move the Finance Committee recommend the purchase of one F-450 truck in the amount of $71,360,000 from Kings Colonial Ford, with a custom service body purchased from Transport Equipment Company in the amount of $26,140.
I second.
So, Pam, I got a question. Is this F-450, is that maybe on state contract somewhere, or?
It is, and when you look at those prices in relation to this, everybody has to order the truck.
Right, I'm sure, yeah. It's not sitting around in the lot somewhere.
No.
Okay.
No. And so I think it's, this one, if I remember right, it's 10 weeks.
10 weeks, yeah.
Delivery.
Okay.
We've in our mind factored in 2 extra weeks, so we think we'll get this to transport equipment by the middle of January. Most of the stuff that we need in stock, we have in stock, but now that we get his approval today, he can go ahead and get the last.
Start getting,
piece of
yeah.
that. And then when it comes back, like our folks will put like a portable air compressor, a hose reel, some of the things that like we don't want to pay transport equipment, all their stuff in Texas, things we can do ourselves.
Right.
And that's why it comes in so low today, but by the time it gets over to Dave and Francis to be capitalized, it'll be a little bit more than that.
But ultimately, this truck should be in service sometime around April, May timeframe.
End of April is what we're hoping,
Yeah.
yes. Because one of the things we run up with the way our fiscal year is and our budget approval process, and then just the natural way vehicle manufacturing takes place is, the new model years come out at a certain time, and you can't place orders before then, and then we also have to have our budget approvals and our specifications. So we always find ourselves with these brand new ones that have to be outfitted with the service bundles. We're getting really close to the end of our fiscal year sometimes.
Although I will give the vehicle manufacturers credit. A few years ago, we were getting 40-week lead times on vehicles, so it's way down from what it was.
Yeah, if you were here during the pandemic or
Yeah.
the post year or two, that, a lot of the chassis delays have improved, so we're not anticipating anything like that this year. Plus, we've got 2 months of cushion to work with.
Right.
Right. Yeah. I don't see the quote from Woody Folsom in my packet.
So I can get you that.
No, that's all right. I just don't, there's 2, Ed Murdoch's 2 different picture, one and, yeah.
Okay, we'll check that for tomorrow. Yes, sir.
Yeah, but so Kings Colonial is the local, so.
They are local. We're over on Community Road. Yes, sir.
Right, I was just gonna say, that's always good to do that, I think, so. I'm glad they have the lowest price.
All right, motion and a second. All in favor? 3-0. Thank you very much. All right, financial statement review for September 30th. Mr. Owens.
Well, you have our financial statements as of September 30th. These also include the preliminary June 30th, 2025 final numbers as well. Let's see, starting off with current assets, cash decreased about $936,000 since last month, to a balance of $2.337 million. We'll get into the reason for that decrease in just a moment, but it's, obviously more payments than what we took in for fees and revenues. The interest receivable, that decreased $225,000. This is a normal entry that we see in October each year. At the end of the year, we do an interest accrual for interest that has been earned on our investment accounts. That was close to $450,000 this year. So we reversed the first half of that accrual in October. The second half will be reversed in December. So once again, a normal routine transaction. And none of the other current asset categories had any significant or unusual activity. So our total current assets ended September at $10.74 million. Restricted cash accounts. The most significant change here was in the SPLOST account. It decreased $861,000. We transferred, I believe, $1.1 million from the SPLOST account into checking to cover some of the, I believe it was the Exit 29 project that is SPLOST funded. We've had some significant payments that have been made on that. That was offset by, of course, our normal SPLOST receipts from the county, thus resulting in that net decrease of $861,000. But all other changes to the reserve accounts were perfectly normal, nothing unusual, and total restricted cash ended with a balance of $68.25 million. Capital assets. Fixed assets, net of depreciation, no change for the month. That may sound unusual, but it's actually common because during the first 3 months of the year, when we're busy with audit, we don't run our normal depreciation. That will begin with next month's statement. Construction in progress. We did see a lot of payments, and this is where most of our cash decrease comes from. Some of our capital in process projects, as I mentioned, the Exit 29 was $1.46 million that we paid this month. The Academy Creek UV upgrades, $381,000. Highway 17, $223,000. And Community Road, $194,000. So those were the biggest costs that we saw hitting our cash accounts.
This construction in progress, that, in other words, you take all the projects that are going on right now and the value of what they're eventually going to cost.
Right.
Yeah, because that's a pretty astonishing.
That's the value we've spent on active construction projects.
You spent.
Yeah.
Not future costs, that's what's already been spent that hasn't been closed out.
In this fiscal year, then, for the end, for the $43 million?
That's for ongoing projects that have not been closed out. So it could have been for multiple years, depending on the length of the project.
Because that's,
It's an open PO.
Yeah.
right, so, for a utility side, that's a pretty astonishing number. It speaks to what we're accomplishing here, I would say.
Yes, we've spent somewhere in the neighborhood of between $2 and $3 million so far this year on our capital projects. Thus, our total capital assets ended the year at $212,918,000. Deferred assets, this is once again a seasonal or annual entry that we get from our auditors for total deferred pension outflows. There's also a total deferred pension inflows in the liabilities section that is also part of that same entry. So as a result of that, the total pension outflows increased $627,000 to the $957,000 balance you see there. And our final balance for total assets, $293,424,561. Moving into current liabilities, as I noted above, the large payments that were made on several projects was a cause for an almost $1.2 million change in accounts payable, a decrease. So accounts payable ended the month at $525,000. Other current liability accounts only had small changes, so our total current liabilities ended the month at $10,591,000. Long-term debt, we had a draw on our GFA loans of $425,000. So that was an increase to the long-term portion of the GFA loans payable, so that balance is now at $24,050,000. Page 2, you see the net pension liability coming up at, well, before that, the total deferred pension inflows is at a balance of $1,058,000. That was an increase of $851,000. And net pension liability at the end of the month comes to $1,350,000. All of that is, of course, part of the entry that the auditors calculated for us, and which they do calculate for us every year. Total liabilities ended the month of September at $75,739,236. Moving on to page 3, our summary revenue and expenses. Very, very standard, common activity for our revenues: sewer, water, debt charges, and admin expenses. Basically, we see that around $3.4 million per month, and thus those 4 items combined are a little over $10,280,000 year to date. Revenues are running ahead of over budget, which is always a plus. Interest income, we sometimes see large fluctuations in this account because of large fair market value adjustments, variances month to month. This month, however, we only had a $7,000 fair market value adjustment on our investments. So the bulk of the change, which was a $72,000 change from last month, is purely interest income, which was about $65,000 worth of interest income this month, bringing interest income year-to-date to $477.8 thousand. Total operating revenues at $11.4 million is basically $3.7 million better than budget. In our operating expenses, we did have a large one pop up in the governing body of $127,000 that was not there last month. That is, of course, our legal fees. The personal expenses are in line and currently only $129,000 over budget. Operating expenses are showing $1.2 million over budget at $4.58 million, but of course, almost $1.1 million of that is front-loading encumbrances for POs that we've issued. Some of them are contracts that go on throughout the year. Others are purchases that we know are coming but haven't arrived yet. So when we look at our total operating expenses of $8.2 million, the $967,000 negative variance to budget is really more of a timing thing, since we've got $1.127 million in encumbrances at the moment. Bad debt and interest expense increased at standard amounts for this month. Nothing significant on debt principal or reserves, so our net revenue currently showing at a loss of $271,490, but I expect that will level out as the year progresses. And of course, our capital fees and SPLOST revenues together are totaling $832,000 for the year. Page 4, a more detailed breakdown of our expenses. As indicated, legal fees are what hit the governing body. The finance division has seen higher group insurance and deductible reimbursement costs this year. I'll be mentioning that a little bit in more depth in just a moment. Purchasing, of course, as you notice, the $136,000 purchase order encumbrance, that accounts for the negative variance of almost $93,000 to budget. So that $377,000 of expenses in purchasing is a little bit front-loaded there. Wastewater operations, it's the plants that are driving the costs. Nothing unusual there. The same things that we've seen, chemicals and supplies that are hitting those budgets. So our total net operating expenses, $8.2 million. Page 5, this is our quarterly group insurance report that we provide. Currently, year-to-date, we've had total group insurance costs of $812,247. Looking at the details behind that number, I noticed that basically our claims and deductible reimbursements have been kind of steadily increasing the last couple of years. So illness and injury are taking its toll on our personnel. But I do notice that it seems that the higher level of those expenses occur at the beginning of a year. If we follow the same trend this year, then hopefully our current overage will come down. The overage versus budget right now of $400,000 is quite significant. So definitely something that I want to keep an eye on going forward. And obviously deciding whether or not we need to make budget adjustments for the next fiscal year.
Can I ask what the rebate is from United Healthcare?
It's I believe, an annual rebate that we get from them. I don't know too many details about it, but
Prescription rebate related from their, what is it, the PMB stuff that they do. So we get an annual rebate on something from prescription. It does not cover the cost of our prescriptions.
Obviously not, no. Well, I know that, yeah.
But it is consistent with what we've seen in prior years.
I'm sure prescription costs are driving a lot of...
About 50% of the total cost.
Yeah, I was going to say, yeah, I'm sure that's true.
Pages 6 and 7 are our cash report. Essentially, we've kind of discussed the items of notable change when we talked about cash and investments on the balance sheet. We'll point out on this at the very bottom of page 7, currently our overnight cash total is $15.8 million, investments $48.67 million, totaling all of our cash and investments $72,044,000. So that's a 1-to-3 ratio on overnight to investments. And you'll see on page 8, overnight cash and investments are pretty close to what they're yielding these days. It's not shown here, but the overnight cash, that money market account, or those accounts, savings accounts, it's a rate of about 4%. And here we see our cash in our investment account is currently getting 4.16. Our fixed income investments currently yielding 4.32%. As I mentioned earlier, this month's fair market value adjustment was only $7,100, and September interest came to about $256,000 that our portfolio earned.
So the decrease in the interest rate hasn't really had that significant an impact at this point?
No, not yet. The bond market will take some time to make those kind of adjustments, and it will depend on if we see continued reductions from the Fed as well. It's more of a cumulative effect that reaches the bond market.
Right. Yeah, I think so.
And then pages 9 and 10 are project report. The only things to note here, we've got the project 2203 mall elevated storage tank. This has been put back on the list because we received a late invoice on that project, $21,900. Other than that, we had about $47,000 hit the Academy Creek UV installation in the form of an additional purchase order encumbrance. So no new, no other new POs and payments or encumbrances hitting our projects just yet. But just wait.
Was the mall, was that have to do with the valve that was the problem there?
It was, it was something to do with a valve issue that they had to get done, and we thought all the invoices had been paid, so we closed the project out, but then they got one about 4 months late, so.
Because I remember that was the sticking
Yeah.
point at the end.
Yeah.
Yep.
But that is our September results. Certainly, if you have any questions, I'll be happy to try and answer them for you.
Thank you.
Congratulations on the audit results.
Thank you.
I do, we always give congratulations to our finance team, but Dave has been doing the bulk of the work solo because we've had a couple people out. So he did a really good job this year shepherding us through the audit with very limited assistance from anyone else. So good job.
You can breathe again.
Yeah.
Yeah.
He's got a vacation plan, so.
Good.
Big one, big one.
Okay. Good. Thank you, Dave.
All right, can I get a motion to adjourn?
Motion to adjourn?
I'll second.
All in favor? 3-0.